Okay, the Thanksgiving dinner is over. The leftover turkey and ham have been thrown away, frozen, or eaten. I fried mine, by the way. Delicious. And you're getting ready for Christmas? And there's real estate news, and it's not all great. So, does it still make sense to buy in DFW? Let's find out together. Okay, so here's the deal. And I'm going to have some articles linked to this best I can, but the sales are down. Real estate sales at home buying down 41% year over year. Okay, Moody's is predicting a 10% market correction, depreciation in home prices nationwide, and there are with rates higher, they have come down recently. You've seen that news, but they're still high based on the beginning of the year, the last few years, right? And so there's a lot of concern out there about buying. So we're going to do a little deeper dive, and my God, I hope I can make this as brief as possible for you and still get out the information. All right, so make it bite-sized. So we're going to go over some charts. I'm going to show those and kind of give you my idea of DFW. So macro level, as macro as I know how to get, going back 30 years, the best charts I could find on that in since 1991, right? So the last 30 years, the appreciation nationwide, cumulative 300%, some a little above, some a little below. Texas is always right there. On average, you can see this chart on your screen now, a little over 300%, right? The cumulative appreciation. So around 10% a year. And that's because, remember that it's compounded, right? So let's say a $200,000 home at 5% appreciation is $10,000 the first year. Well, it's like $10,500 the next year, right? Because it's 5% of $210,500, right? So there are some interesting and important points to know about that. That's why leveraged investment like real estate is so helpful, okay? So also, even during the financial crisis, right, of 2007 through 9, really, much of the market dropped 10, 20, 30%, especially the big markets in Arizona and California and other places, right? But Dallas actually only dropped 3 to 5%, DFW, Metro. And you can see the chart here that it's actually a real slight change compared to the U.S. overall, right? I think they use the Case-Shiller's report for that, which is the 22 biggest market cities. And so we in DFW went in the recession later, didn't go as deep, and came out sooner. Home prices always trend up. And so when you're looking at, golly, I don't know if I should buy right now, maybe it looks like prices are a little high. Well, they are higher in DFW, but they're still just catching up to many of the other big markets. And we're one of the top 10 metroplexes in the whole country that people are migrating to. Part of that's business, right? We've got so many businesses, small, medium, and large cap, that have thousands and thousands and tens of thousands of people slated to move here over the next 5 years anyway. And it's already been going on for the last few, right? Our Texas cash out laws and some other laws and the way we structure and kind of protect equity and limit access to it, where the way we've structured that here in Texas protected a lot of that equity and just the caps, right, as well on just getting too crazy in appreciation. So affordability is still really good here, not as good as it was. But the other thing is that higher rates are actually a good thing. I know it's weird, but what happens with higher rates? Your competition gets filtered out because they're like, I'm not sure, right? And the sellers get a little, they're starting to get the message, right? Okay, we got to negotiate a little bit more. In fact, last year, only 2% of contracts had seller concessions on them of some kind, pay and title or given other concessions. Now 42% of contracts do. So there's a great opportunity to get into it, especially when you look at the fact that, I can't remember, there's a Moody's article in here, Fortune, there's Realtor.com, Zillow, get them mixed up, but a couple of them say DFW, 2% appreciation, even though the rest of the market's going to go down. So I wouldn't buy in all areas. Nashville looks like it's going to take a bath, 20% drop, but DFW is a strong place to buy still. We still expect appreciation, but even if it's flat, take a look at this chart. Maybe we go down this next year and the year after, right? Maybe. Doesn't look like that, but let's say we do, because it could happen. But the way Texas bounces back, we average it out, you're looking at 3 to 5% appreciation. So even if it's really, even if we're really conservative in the next 5-year horizon, you're still making money. You can see that you're going to make net of costs $60,000, $70,000 on a $500,000 home, right? And that doesn't include, obviously part of your money is going to pay down the loan. You'll have more equity than that. That's just the appreciation. And the return on investment, if you look at that part of the chart, with just 10% down, which is what we recommend, the more down you put, the lower your return on investment. There's another video that I have that you can check out on that, a deeper dive into ROI. But that's a big return, 139% over 5 years, right? So you want to take a look at that, the opportunity to buy when others are out, sellers are negotiating, and don't forget that inflation buster and lock and drop program. So we know rates are higher, but remember, you've got the opportunity to get a 2% below market rate for 2% in seller concessions. That's the thing to remember, okay, for that first year. And there's a whole another video on that too. And then we're going to do our lock and drop program where we're going to refinance you as long as you refinance within 3 years, no lender costs, no appraisal, because I've been through this before. Fannie Mae thinks rates are going to be between 4.5%, 5% in 2023. Maybe it's 2024. Either way, you've got an opportunity to turn that into there's enough strategies out there to bridge the gap between where rates are now and where they're going to be, see appreciation, get into the market when sellers are negotiating, and not wait until spring or summer of next year. Because guess what? When rates do come down, the frenzy starts again, and now you're bidding $50,000 over list again. Do you want to do that? No, don't do that. Okay. So if you have questions, give us a call. If you think this is valuable information to share, do that, because this is important. It's a great opportunity. We don't want you to miss it. And we want to make sure that we're here to help you develop the strategy so you can have peace of mind about it. Feel comfortable about it, of course. Remember, be the buffalo, not the cow. The buffalo runs into the storm with a herd. Cow runs away, gets stuck in it, gets frozen to death, gets in the storm longer. We don't want that. We're with you in the same herd. Let's run through the storm together. Appreciate you so much. We're just a phone call away. If you need us, we're in your corner, and we wish you the best wherever you're at in your home ownership or home buying journey. Cheers.